I'm just going to introduce my publisher, not author. I'm the author. The publisher. And do you want to say a few words in introduction?
Yeah, as Simon said, I'm his publisher, and I'm dressed probably a bit more like an undertaker, but I'm in fact a publisher. I know that a lot of you know Simon far better than I do and have worked with him on all sorts of different projects, or in Bliss's case, are in fact even married to him, so know him much more, much better than I do, and know his work and everything that he does. What I can say as a publisher, it's the first book which I've ever worked on, which takes in Mozart, Mark Zuckerberg, Richard Nixon, the events on Jekyll Island, which you'll read about in the book. But compared to any author that I've had the privilege of ever working with, I think Simon was the first person to actually teach me a lot more about publishing. We knew when we first met Simon, myself and the people I run the company with, that this was a guy who's like a force. And I remember we were holding a book launch last year, and I've said to Simon that at the moment the numbers aren't looking terrific. And he said, fine, how many people do you want me to bring along? I said, well, how do you mean? He said, well, how many people do things take? He said, well, I can bring 50 or 100 if you want. And I thought, my goodness, this guy knows absolutely everyone and everything. And that's sort of approach that he brought to his book. And as I said, Simon actually taught us more about publishing than we know, because whereas Simon works and looks at the banking sphere, the sort of ideas which he talks about are in fact, I think, sweeping the whole world. Another guy that we published, a guy called Simon Dean Johns, is talking about how companies are either facilitators that make things happen for customers, or companies that basically look after their own interests. And that's happening across the entire world. And Simon's one of the guys who's actually making it happen. So in working with him, we actually learnt a lot as publishers, not just because he's got all these new things like the Kindle and the iBook and the Nook and all this sort of thing, but actually in how you approach what you do and how you unlock value. And I think in working with Simon, what I've come to realise is that Simon does this in so many aspects of his life, and that's why so many people kind of flock to Simon. And particularly at a time like this, when if we look at some of the sort of figures for youth unemployment, which are coming across from all of Europe, and some of the other sort of issues which are going on in the economic systems of the world, that the conventional compass is broken, and people are looking to people like Simon with vision, with energy, with innovation, with ideas, to actually take the world to a new place. So that's probably about as much as I can say, because I know already a lot of you know him much better than I do. All I can say is that this guy's a true force of nature. I think that's absolutely enough for me, and I'll just hand you over, and there we go.
Wow, okay, that was a fantastic introduction. That was really flattering, and it's really flattering to see everyone here today as well, over what potentially is such a boring topic like banking as well. But what I've always tried to do, and what I tried to set out in the book, was to make things which are really quite serious interesting to people that aren't normally interested in this type of thing. And that's always been my goal, because for 10 years, when I first discovered that there was a few things wrong with banking, I wanted to get that message out there. But what I didn't want to do is write a book for the same people that are already interested in what's wrong with banking, because there is a niche, there is a movement out there for people that care about banking and really understand fundamentally the massive flaws in our current banking system and how that leads to so many issues that affect us all. But I didn't want to write it for those people. I've always been a practical person. I wanted to write it for 3 people. And the 3 people were very close to what I've tried to do. The first was my first venture in business when I quit my job as an investment banker 6 years ago now, was to help as many students and graduates as I possibly could to secure careers in the sector which I think needs the most change, which is investment banking and retail banking and fund management and all the other areas in banking. And what I've seen in that transition from when I tried to secure my career and I got rejected from hundreds of banks, and I had to really figure out by knocking on doors and being a T-boy and waking my way up, I figured that a lot have actually really changed. And right now, the students, and we've got my last business, which we just sold last week, at the end of it, we had 100,000 students and graduates on a database who are all highly, highly intelligent people. They've invested tons of effort and tons of money into their education, into trying to get somewhere and trying to make, these, if we're calling these evil bankers right now, well, I've got first-hand experience of our next generation of banking and finance leaders. And they're all, they're our children. They're people that are going to, our top universities. They're people that are going to different universities and just trying to get on. And right now, they are being absolutely screwed in this economy. They really are in a real shit place right now. They've worked really, really hard. They're deep in debt because, they are a part of this debt-based system, which I talk about in the book. And right now, they're in an economy where no one wants them because they've been trained to do things a certain way. And they've been trained to go to university, get a good job, and then if that's not working out, go and get a master's. And they probably self-funded that master's, or someone in their family funded that master's. And masters cost a lot of money. I went deep in debt when I did my master's. And they're in a position right now where they've done what they were told to do, but they're just not getting that job that they actually want. Now, the reason for that, which I try to tackle in the book, is because the world in the last 5 years has completely changed. It's changed faster than ever before. So I wanted to write this book to help those who are right now feel like they're working so hard and they can't understand why they can't get a career right now. And I wanted to show them that there is actually a new way of doing things, and how you've been taught to do things is really the opposite of what works right now. The second people that I wanted to write this book for, and I tried to achieve a lot in a book, and Ash told me it should be 3 books, really. He still insists on that, but I insisted we had a few fun along the way, didn't we, Ash?
We had lots of fun.
Yeah. But Ash made me change things which would have been the wrong decision, so I highly recommend working with a publisher like Ash. It's really been a great experience. And I wanted to write it for the government as well, because the government right now are in a position where they really are in a lose-lose position. This whole left-right argument is a complete lie. This whole thing that we've got the right versus the left, the people that are trying to tax the rich and redistribute to the poor, and all these forces which just, no matter what happens, nothing ever seems to work, apart from one thing really seems to work, and that is guaranteeing that the government's debt increases and increases and increases and increases. And this whole left-right thing is just a complete lie, because if you look at every single government, the debt's just gone up and up and up, no matter whether it's Conservative or Labour. And so I wanted to explain, so we've worked with a few members of Parliament over my time. I spend a lot of time working with a not-for-profit called Positive Money. Positive Money was founded by a gentleman called Ben Dixon, and I talk about him in the book, and a lot of the research that Positive Money has actually done. And they've spent the last 3-4 years really, they had the painful task of reading 600 reports written by the Treasury and Bank of England. Because they went to the Bank of England and asked them, is there a manual explaining how you create money? And they said, no, there isn't. That's how hidden this topic is of how money is actually created. And so they had to trawl through 600 reports in order to just put together the first report and book on how money is actually created. And it is so crazy that it baffles the mind, which is why no one wants to believe it, because the way that money is actually created is just the complete opposite to what anyone would think a logical system would actually do, which is why this is, such a controversial message, I guess. So I wanted to write it for politicians that just can't understand, no matter what they do, no matter how different they want to make, why their debt is just increasing and increasing and increasing and increasing. And in fact, our current system is guaranteed to increase. It's part of the system. There's no way of fighting that, because the way that banking is actually structured is we're playing a game where we have 2 rules. And the first rule is that if we want more money in our economy, which drives growth, then we have to have more debt. And the reason that we have to have more debt is because the government have essentially outsourced the ability to create money to the private banking sector. and they've been given a special subsidy to the tune of £2 trillion by giving them that ability to create money. Now, one of the things that I did, I recently gave a TED talk, and I tried to help people conceptualize what £2 trillion actually looks like. And it's worth actually explaining that right now, because we talk about billions and trillions over pizza, we talk about government bailouts, we talk about like it's normal language right now. So it's important to understand what a trillion actually is. So if I asked you to convert, let's take £1 million, and if I asked you to convert 1 million into seconds, and if anyone's seen the TED video, then don't answer. But if I asked you to convert 1 million into seconds, and we went back 1 million seconds from now, today, how far away do you think 1 million seconds would be? Just give me a guess. Shout out what you... 10 years? Yeah. Anyone else? Who hasn't watched the video? 15 years, days, weeks? 15 years? 15 years, okay. Well, a million seconds is in fact 12 days. Okay? A little bit off. Now, with that in mind, that's something that we can all grasp. We can all comprehend what 12 days means. But what if I said 1 billion seconds? Now that we know that 1 million seconds from today is 12 days, how far away do you think 1 billion seconds might be? 12 million. 4 years? 4 years, okay. Any other guesses? 4 years sound fair? 30 years. Well, it's in fact 32 years. So 12 days compared to 32 years is the difference between 1 million and 1 billion. That's a pretty big figure. You know, one of my business angels in my last business, his net worth was 1.3 billion. It's pretty, 32 years compared to 12 days. But now if I said to you 1 trillion, let's take 1 trillion seconds from today. Let's go back 1 trillion seconds. How far away do you think that would be? If 32 years is 1 billion seconds? 100 years? 3,000? 32,000. Exactly right. 32,000 years. That's how big 1 trillion is. 32,000 years. That's before humankind. You know, we're talking Homo sapiens here. So the government have given the banking sector a special subsidy to the tune of £2 trillion. That's how much banks have created. And all of that money has been created as debt. Now, there's problems with that, and I give 12 big problems that tie into most of the problems that we have today. So for the last 6 years, I've been presenting all around the world, trying to explain and get this message out. So recently, it was a real great event, the work that Positive Money has done. They got support from a Labour politician, from Member of Parliament, and a Conservative Member of Parliament, because this is party neutral, the problems with banking. And they have taken up, essentially they've actually looked at how money is created, and out of the 600 members of Parliament we have in the UK, only 4 of them have a comprehension of how money is actually created. And these are the people that are dictating all our policy. Well, the funny thing is they're not really dictating policy, because there's a force behind them much bigger than any politician, and that's called a bank.
I bet George Osborne isn't one of them either.
No, and George Osborne isn't one of them. And I actually went to Alistair Darling the other day and spoke about this, and he just looked like me. You know, he looked at me like I was crazy, essentially. And so, yeah, I wanted to write a manual, essentially, for government to comprehend why what they're doing is never going to work. Because they're in an economy with 2 rules. If we want more money, we have to have more debt. If we want less debt, then we have to have less money. So the choices that they have is more debt or recession. There's no in between. That's what boom and bust is. It's more debt or recession. Okay, so that's the boring economics bit. But what I wanted to do is describe that in a way where it's all interesting to you, essentially. And so the third person that I wrote this book for was for entrepreneurs and for business people. You know, someone that I like to spend a lot of my time with is entrepreneurs and business people. I consider myself an entrepreneur, and I enjoy spending time with business people. So a lot of the book is about inspiring stories from great business people and great entrepreneurs that have led to the creation of these 7 hugely disruptive technologies. And these 7 hugely disruptive technologies have completely changed the landscape by which we can do business. And they also have given the ultimate landscape by which we can completely change banking from an entrepreneurial perspective. So us as business people, most of the book is written for business people to understand some of the new rules. And so the business people right now, they're in a funny situation. So essentially, the banking system, if you look at a retail bank, with the £2 trillion that they've actually created, in a retail bank right now, about 8% of the money goes to small business. It goes to a business, someone trying to do something that creates jobs, someone trying to do something productive. 92% of all of the money that banks create, that we've given them a license to create, goes to speculation. Essentially, they prefer to give it to a proprietary trader who's going to add no value whatsoever than someone that's going to create jobs. And there's rational reasons why they do this. It's not just irrational. It's because there's a lot more money to be made and there's a lot less risk to do that. And secondly, it goes to pushing up property prices beyond what anyone can afford. So many people think the property prices is good for the economy, property prices going up. But really, all we're doing is we're creating wealth at the expense of our children that aren't going to be able to afford property. There's no added value whatsoever. So all we're doing is pushing property prices up. And that's essentially where almost all of our money is going. And the next thing is personal debt, because personal debt, rather than a company, a business person who can create some new value and some new jobs, unfortunately they've got, well, not unfortunately, but they've got limited liability. So it's really risky for banks to lend to business. So instead they lend it to people who secure it on their income. And the people that do that are people that have jobs. And essentially the best type of debt for a bank, the most profitable transaction you can make, is somebody like a student who's got a good future. And if you can get them in debt early by giving them interest-free loans, then they will be in debt for the rest of their life. Because somebody in the world has to take on the debt, because we're in a situation where debt is money. So if the students don't take it on, then you have to take it on by trying to afford their fees and your houses. If we don't take it on, then businesses have to take it on. And if businesses don't take it on, then governments have to take it on. And the reason that debt has increased forever is because in order to create this illusion of growth, we need to continually increase debt. And so there we are in this problem that's never going to be solved by any of the policy that we actually have right now. So you can see that I've got a lot of passion for this subject. What I always wanted to do is try and explain it in a way. So when you've worked as a stockbroker, when you've done a master's in economics, when you've worked as a trader on the trading floor, when you've worked as an investment banker helping VCs exit their companies onto the stock market, when you set up a business in banking, training the next generation of banking leaders with working in the finance sector, and then when you set up a non-bank, which is our new project that I'm setting up with my wife right now, called banktothefuture.com, you tend to pick up a lot of jargon. And I wanted to strip out all of the jargon and speak in a way where anyone could pick it up. And there's no jargon in the book whatsoever. Everything is assumed that people don't know anything about finance. And it was not written for bankers. It was not written for people with a high financial literacy. So that's the book. That's how I came to write it. I think it's about 10 years, although it took me 9 months to write it, it's really about 10 years worth of different experiences put into the book. And it's something that I'm really passionate about. It's something that I think is important to everybody. And the other major takeaway that I wanted everyone to have is I didn't just want to write a book about educating people about the problems of the world. I wanted to have a complete comprehensive solution of how I think the world is actually going to look after we sort out these problems. So essentially, there's two major things which are happening right now. If you look in the center, you've got a bank. Now, a bank is essentially the most important role of a bank right now is the creation of money. Because if you took away a bank, we'd only have 3% of money in our economy, which would be the dire depression. We'd all be rioting. We'd all be hunting each other down because the amount of money that government create is minuscule compared to the amount of money that banks actually create. So we've created this system where the most useful task that a bank could actually do is create money in the current system to keep up the illusion of growth. And then around that, we have this technological innovation brought around by 7 disruptive technologies. The first is the World Wide Web, so the internet completely changed everything. The internet had a bit of a double-edged sword. The first thing that the internet did is it gave birth to the second disruptive technology, which is digital money. The problem with digital money is that what we do in this book is we take an adventure in time travel and we go back and fix the system to show people what the different financial crises would have looked like if we had fixed the system. And what happened in 1844 is the Conservative government at the time was a monetary reformer. His name was Sir Robert Peel. And Sir Robert Peel recognised that it's a big problem allowing banks to create money. So at the time, banks could actually create banknotes. So the notes that we actually have right now, at the moment, banks are only, banknotes and £10 notes and £20 notes are only allowed to be created by the Bank of England. Before that, a bank was invented as a safe storage for gold. And so people used to put their gold in a bank and they'd get a receipt in exchange. And that receipt was a piece of paper that said this person owns this amount of gold. And people used to go around and exchange these notes with each other. And basically the paper became as good as money itself. Eventually people stopped going into the bank to get their gold back and people just used paper instead. So the receipt for gold, the banks recognized this and they basically created more receipts for gold than they had gold. And so the early bank runs were when people actually started to recognize that actually, how is there so much money in the economy? Let's go and knock on the bank's door and find out what's actually happening. And then when they asked for their gold, the gold didn't exist and you'd have a complete collapse of the banking system. And originally then you had people like JP Morgan who came in and they were essentially the central bankers at the time. And so these notes were created en masse, and the Conservative government at the time, led by Sir Robert Peel, recognised in a really, really depressed economy that we need to stop banks from creating money, because if they make their profits by creating money, then there's a massive disconnect there. There's a massive incentive to create more money. Now, I'm not saying politicians should do the same, because they certainly shouldn't, because there's an incentive for them to create money when people are knocking on their doors, rioting, saying, give us pay for our student fees, pay for our student fees. So we had this system where banks were creating money en masse, and Sir Robert Peel recognised, and he drafted legislation called the Bank Charter Act in 1844, which made it illegal for banks to create banknotes. But what Sir Robert Peel did not know is that in the future money would be completely digital. And so he didn't put in the legislation that it would be illegal for banks to create digital money, because no one knew what digital money was at that time. But as the internet came around, as digital money became, banks realized we've got a license to create digital money. And they created digital money en masse, and that's where the £2 trillion actually comes from. So we've not updated the law since 1844, and then economists have gone into university and told all our students this is okay, banks can create money. Banks are just an intermediary between borrowers and lenders, which is a lie, it's not true. So we've built all our economic theories and everything based upon this, and it baffles the mind that something like that could have happened. But we used to debate this a lot. Politicians' #1 debate was trying to fight off the bankers a long time ago. But since the science of economics came around, people stopped questioning whether banks should create money, because they put it in a textbook and everyone said it's okay. And so the double-edged sword is that we created this money en masse, which has led to all the financial crises that we can imagine. But then again, what's happened right now is that the internet has also driven a new wave, and that it led to the next hugely disruptive technology, which is social media. And social media gave birth to funding platforms like crowdfunding, like person-to-person lending, the 4th and 5th disruptive technology. And it also gave birth to companies like, for example, Octopus Card. So Octopus Card, they were essentially the Oyster card that we know today, that we use in London in order to go to transport. You swipe your card in order to get travel. Now that came from something called the Octopus Card. The Octopus Card was created in Hong Kong. And in Hong Kong, the Octopus Card became so popular that they started to allow people to deposit money onto their Octopus Card. And essentially shops then started accepting it as payments. And all of a sudden, this institution that wasn't a bank started to look very similar to a bank because massive amounts of payments in Hong Kong were going through the Octopus card. And all of a sudden, the bankers didn't like this. So they complained to the Hong Kong Central Bank and said, "Oi, Octopus card are involved in unlicensed banking right now." Because they recognize that actually some other players coming along and taking a lot of this business, and they're acting like a bank should. They're not creating money, they're just depositing money, existing money in existence. And when they complained, they went to Hong Kong Central Bank, and the Hong Kong Central Bank came back and said, "Actually, you're right. We should stop this. Octopus card are actually engaging in banking without a banking license. Why don't we give them a banking license?" So they gave Octopus card a banking license, and it shot off. M-Pesa, we've had all these amazing examples of Vodafone accidentally becoming the world's largest bank in Kenya, simply by allowing people to deposit money and using SMS on the smartphone, which is the final disruptive technology. And we've had this complete disruption in banking right now. Now, we're in a scenario right now where the people that are most likely to become banks of the future are companies like Apple, companies like Google, Google Wallet, iTunes, all these companies, they're looking very similar to banking. They're involved in these payment systems. So what's actually happened is around the banks where we're creating money, we have this layer of innovation. Now, nobody wants to deal with their bank anymore because no one trusts the banks, but they do trust them to put their money there because we still use them. We don't trust anyone else with our money apart from the banks, even though we don't trust them. So we're in this scenario right now where they're losing relationships. The next generation, they just want to get on their phone and they want to press their Facebook app and they want to make a payment to their friend. That's all they want to do. They don't want to go and fill in a KYC form at a bank and photocopy their passport. And all these things, all these crazy things which are happening right now that the next generation just don't get. They don't understand that world. And so we're having all this innovation, and that's the double-edged sword right now. That we're in an economy right now where entrepreneurs could actually do a lot better than the banks. And we're seeing tiny companies, a few 15 people that are creating things like Square, where you plug in a little gadget to your iPhone. And because it's so hard to become a merchant as a business, they just allow you to do that. You just plug it in and you just start using it and you start taking payments. Because they're focused on what the business actually needs, and the bank is just stuck in this caveman world of trying to maintain their monopoly. So what we're seeing right now is the banks are always going to be in the background because of the reliance on the creation of money. And we're having this innovative things where we like to work with companies like Facebook. We like to work with companies like Google. We have a nice relationship with them. We like things that happen in those platforms, and they're becoming banks, essentially. Facebook launched Facebook Credits. 11% of their revenue now comes from Facebook Credits. But Facebook Credits is built on PayPal. PayPal is built on the old school banking system. So we're just seeing that banks are going to go more and more into the background as we have this layer around here. And us as a consumer, we just want to play with this little device and we don't want to do anything else really, because everything is moving here. And so we're in this, that's the scenario that we're in. And then also you've got platforms like, Bank to the Future, which we founded, was to help get more money to entrepreneurs. And we're finding that people can now, the banks don't want to lend to small business. I know Project Merlin is forcing them to lend to small business, but they don't want to do it. In the UK, we have no venture capital market. There's no such thing. Venture capitalists, they invest in growth. They don't invest in ventures. They don't invest in risk. We've got a very tiny venture. In America, they have a pretty robust venture capital market. We've got nothing in the UK. So it's over to, in business, if you want finance to do anything productive, the banks are out, the venture capitalists are pretty much out. You have to go to either individuals and people. And now the internet is allowing anyone to invest through, and that's what we're looking to capitalize on upon Bank to the Future. We want to get as much of that money that would have gone on speculation and pushing up property prices and all the things which add no value to the economy, and try and get that to businesses that are looking to take some risk, the right businesses, and make a difference, try and create something, and they can get other people to fund them. And so there's all this innovation coming along, and it's just the most exciting time in history for me, because we have these twin forces, On one side, we have this banking system which is guaranteed it needs to be reformed. And at the very other side, we have all this innovation that's coming along that banks don't really get. So it's over to businesses and entrepreneurs to really make some kind of difference. And now, thanks to social media, we all have a voice. We can all be heard. We can all go out there and really help each other to get our messages out there. And there's never been a time like that in history. The barriers to setting up in business completely gone down. Now you just need a smartphone, an internet connection, and a laptop. And my message I had a message the other day from a programmer. So he commented under my video, and he said, "Look, I tried to get Goldman Sachs contacted me once. I'm really good at programming, and they wanted me to create this system, but I didn't want to work for a bank because I don't like what they're up to." And he was saying, "What's your advice? What should I do?" And I said, well, you're in a scenario right now where you can completely work from home. So what do venture capitalists do? Venture capitalists, they invest in 10 businesses and one of them will go really well. If they're good, it's the game that they play. So why don't you as a programmer just work with 10 businesses, get equity in their business, and one of them will go really well. And you just use all your programming skills. You can do all that from home. All you need is a laptop, internet connection, and a smartphone. And you can completely create your own rules. And one of those businesses, even if you did that 20 times, one of them is going to be something really big. If you're picking, the right things that you're really passionate about. So we have these 7 technologies: the internet, the social networks, the smartphone, the crowdfunding platforms, person-to-person lending, all these things are coming together, and then microfinance as well. So all of this innovation is now working its way. So I discuss in the book how the current banking system completely screws over the third world. The reason that the third world and developing countries are in debt is purely because of our financial system. Every penny in our bank comes at the expense of someone else's debt. And when you're trying to look for a new market to push your debt onto, we tend to use institutions like the IMF and the World Bank in order they don't bail out, they lend. That's why they're 60% more in debt than before the IMF was created. And they've paid their debt off 6 times over. So, we're in this, we've completely screwed developing countries because of our financial system. But now we've created innovations like microfinance where we can use our savings in order to distribute money back to entrepreneurs and businesses. And they're completely breaking the rules. No banker in the world would have thought that lending money to an entrepreneur, a small amount of money to a female entrepreneur in a developing country would have led to a 97, 98, 99% repayment rate. It's crazy. Compared to traditional banking models. So what's actually changed? The whole system that we actually have today is completely outdated, is completely not up to date, and that's why all this innovation is coming along. I've talked for way longer than I thought I was going to talk. Why don't we do some more networking? It's bloody hot in here. And thank you very much for coming and supporting me on this journey. Thank you.
Take a few questions. There must be some questions.
Yeah, has anyone got any questions that they'd have or any opinions they'd like to put out there? Sure, go on.
Has the bank opened? When does it open?
Bank to the Future?
Yes.
Okay, so Bank to the Future is not a bank, first thing. Bank to the Future is a platform that allows entrepreneurs, businesses and investors to raise finance and invest in each other. Essentially cutting out the bank because they don't want to play in that market, and allowing you to use all your networks, your connections, so you can be the freak that you may be and you don't need to put on a suit and pretend to be someone else and go and beg to a bank for finance. You can just be you. And if people like you, they'll fund you. And if you've got, good social capital, if you've treated people well on the internet, I've got a big thing against bullies on the internet. I think it's a real major issue. People are really nasty to each other on the internet through some of the social networks. That's the bad side of it. Really using them as anonymous usernames and faceless people to really abuse and be nasty to people. But if you behave yourself on the internet, you will have a good, what we're calling a social capital score. And you can use your social capital, which combines how you behave online with traditional credit scoring, your ID, do we believe who you say you are, and various other factors that we put together in order to build a rating so you can borrow money, or you could raise equity finance, or you could raise alternative finance where you don't need to pay it back through some of these models. We are open for applications to businesses that want to raise finance on the 14th of May. But I'll put the disclaimer in right now. We've been dealing with regulations for 2 years, and you never know when someone's going to pull up a new curveball. So I think we're on our fourth version of a launch right now. And a lot of the team from Bank to the Future are here today if you mingle around. But yeah, we're due for that, and then we'll be open for investments later in the year. We've got some really exciting businesses that are going to be raising finance through our platform, some weird, some good, some interesting ones. Yeah.
Yeah, I've read the book. I thought it was absolutely brilliant, actually, and I've also read the New Economics Foundation book about
Oh,
where
yeah.
they come from.
He's a
Yes.
member of the team.
Sorry?
No,
No, I don't know him.
and that's a lot more complicated, actually, even though that's supposed to be an easy guide as well. But
Yeah.
the question I've got, which fascinated me, was the solution, which I think is brilliant, is the transition. Because if you do get an independent body that does create money, and that money then is given to the government to spend, and banks have to repay the debt that they've got, the banking system, the financial system is big in our economy, and it's got shareholders and it's got value. Presumably, at the point that that happens, the banks effectively become worth far less than they actually are, and that
Absolutely.
potentially creates a massive problem in terms
Yeah.
of a smooth transition.
It does, but what I liken it to is, imagine if you've been, for the last 10 years, you've been a heroin addict. And you've reached the point in your life where you say enough is enough. I don't want to do this anymore. I don't want this to be a part of my life. It's going to be painful. You've been taking heroin for the last 10 years. There's no easy way of transitioning out of that. We can't transition in a way. What we have right now is a disaster. The economy that we have right now is a disaster. Everything we're doing is leading to bigger and bigger and bigger problems. By reforming the system, there's going to be some people that get hurt. And the main people that get hurt are going to be shareholders in banks, and people that benefit from the size of the current financial system. But that world doesn't exist anymore. It doesn't exist. It's not a part of the world we live in. It was all an illusion. It was all fake. And so we need to transition away, and the banking system is going to be a lot smaller. However, we're going to move to a banking system whereby banks do what we think banks actually do. They do what we're doing at Bank to the Future. We're trying to figure out, we're not trying to create money. We're not asking for a special subsidy to the tune of £2 trillion. We're just figuring out new, innovative ways. Why do you think that the current banking system, all of the technology is 30 years old? It's because they don't need to innovate. They don't have to innovate. If you want to go away and say, no, I'm not going to use you anymore, you haven't innovated, where are you going to go? You've got no choice. They've got a special monopoly.
But that's the problem with that, because again, will that ever happen? Look at Greece. Everyone knows, presumably, that they're going to go bust at some point. But
They are going bust, yeah.
The pain that the ECB and the rest of the Eurozone seem to be prepared to take in terms of continuing to bail them out seems to them less worse than actually let them go, even though ultimately it's going to happen.
Yeah, so what they're doing is they're selling short, it's all short-termism. But for Greece right now, what we have to remember right now is, if it all goes, this is all a human creation. This isn't a natural disaster. This isn't a tsunami. Money was created by humans in order to serve humans. All we need to do is make that transition. Yes, it's going to hurt the bankers. It's going to hurt banks that are used to, ginormous bonuses. That industry doesn't exist anymore. It's not going to be there anymore. It's going to have to be a lot smaller. But you've got to look at the other side as well. Imagine the possibilities of the government, the Greek government, just being able to pay off their national debt because we transitioned to a non-debt-based economy, and all of that money working its way through the economy. There's no reason. We're stuck in this mindset of believing that we have to have the current existing system where banks do have to create money as debt, if people actually know that. It's completely false. So yeah, the banking sector will be a lot smaller, but it was never meant to be this big in the first place. They were never meant to pay themselves what they pay themselves. It's disproportionate. If anyone's seen, I did a review on Press TV for the film Margin Call. And there's a moment there where this risk manager from what is probably Lehman Brothers, we don't know, the film doesn't say, he said, I used to build bridges. I used to use my talent to make a real difference in this world. Now I build derivative products and I get paid stupid sums of money and I create no value whatsoever. It's all speculation. That speculative economy needs to disappear. There's no value in it whatsoever. We need to get rid of that speculation, money making money because of you having money. We need to get that back to some kind of value. And the effects of keeping this system are as follows. Here's exactly what's going to happen. I put it on a YouTube video, I think a year ago or so. It's called The Great Depression of 2013. The first thing that happens is because money is created as debt, we need to exponentially increase debt. We need to increase it forever. Because every time we stop, we end up with a recession and the government bailing out and taking on that debt. So the debt needs to increase. That leads to a banking collapse, inevitably, predictably, guaranteed. So they're going to all lose their jobs if we stick to the existing system. But the problem is that they're all taking their bonuses out, and once they've quit their job, they got their money. So that's the system we're in right now. Everyone's working to a short time frame. Because banks create 97% of our money, the next step is that the government will always bail them out. So because they know that you can't let a bank go bust in the current system. You just simply can't. So the governments will always bail them out, and that will lead to credit rating downgrades, just like we're seeing in Greece. That's coming to the UK in the next round of bailouts, when the next round of, we've done nothing to solve the problem. So we've got the same coming again in the next cycle. It gets worse each time. The recession will get a lot worse. At the moment, the only reason we're holding on to our economy is because we're keeping interest rates low. And who benefits from low interest rates? The banks that can borrow the money at that rate and then lend it on at a lot higher rate. So that's why banks are dictating policy right now. That's the only reason our economy is alive. If we put our interest rates up now, our economy is over. We'll all go bankrupt. There's so many people that are living paycheck to paycheck just to pay their mortgage right now. You put that interest rate up, they're gone. There'll be mass disappearing of money. So the next thing after that is that they're just going to put taxes up when taxes go up, because they either borrow the money or we have more tax. They take in more tax. As tax goes up and up and up, eventually you have riots. You just will. We're moving towards 100% tax. At some point in moving towards 100%, some people are going to get pissed off. That's what's happening in Greece, essentially. So once you've got that, then you've got central banks coming in. Now, the problem with central banks coming in is now Europe is just simply big Germany. Is the ultimate question of there's no democracy. You're pulling away democracy with every central bank bailout right now. And they're stripping the assets of countries which they don't, there's big problems with lending money cross-country, because it's okay if you want to do something in your own country, but when you're ruled by another country, it's completely different. It's a complete question on democracy. So all we're moving in the infinite, if you continue this system, is you're moving to a central bank like the World Bank that will own everything. That's where we are in the infinite. Or we change the rules. And changing the rules is, as we've put out in this book, there's very simple ways of doing that. It will cause some pain. And that's a long answer to what you asked, isn't it? Anyone else got any questions, or should we continue mingling? You're scared to ask now, aren't you?